Hey guys, Stock Saturday and a slightly green week for me. I believe bucking the trend from the market slightly. I'm up about £2,000. We had the Wednesday rate rise from the Federal Reserve and sort of forecasting more rate rises rather than the sort of pivot that a lot of us were sort of anticipating. Not necessarily this meeting, but sort of going forward, maybe sort of at the Christmas or sort of early December meeting, or maybe in January. But no, they're saying plough on ahead, even if it means everyone else is sort of a little bit screwed. And then, yeah, UK followed suit, 0.75%, a little bit sort of less sort of pro raising. They were sort of mentioning a few sort of struggles that this is causing. But then Friday, the non-farm payrolls report was sort of stronger than expected, and for some reason, everyone's sort of seeing this as positive news. So a little bit strange, because in my head that just means that even more sort of keen to raise rates and sort of carry on with this tightening. So yeah, not quite sure why everyone saw that as positive. Drop in the comments if you can see why. But so I thought I would carry on my trend of highlighting a couple of companies that I'm keen on. So sort of a lot of people do notice my 123% green on Shell and sort of wonder why I'm not selling this and taking a bit of profits to average down on some of my more in the red stocks. But I do always say it's not really about sort of how much you're in the red or how much you're in the green. It's you have to look at it with fresh eyes every time, basically. And when I sort of look at Shell, I still see sort of very good value, undervalued, if anything, company. They've just released their third quarter earnings and they look pretty good. Not quite as profitable as Q2 with oil prices and gas prices sort of coming down slightly, but still looking pretty good. Sort of $21 billion of EBITDA and $9.5 billion adjusted earnings. Cash flow again, sort of a bit lower than the earnings, of course, because they're still sort of investing. So yeah, sort of 7 billion in free cash flow. So yeah, pretty good. But I also think it's worth focusing on the renewables side of things. So you've sort of seen not quite the earnings and EBITDA sort of flowing into the renewable side just yet, but it's still sort of a fair bit, 400 million in adjusted earnings for one quarter. Sort of isn't too bad on 9 billion of earnings in total. So obviously it's still got to come up, but it is coming up. And then renewable generation capacity. So they've acquired a company which has sort of gone through this quarter. So the in operation capacity has gone up from half a gigawatt to 2.2 gigawatts. But you can see obviously they're still building. So this sort of under construction 2.4 gigawatts from last quarter hasn't just dropped down because the in operation has gone up. The under construction is up to 3 gigawatts. So they're still building a lot more. So you had 2.9 gigawatts as in operation and under construction last quarter. And in just one quarter, that's up to 5.2 now. So yeah, I like the idea of sort of putting the gas and oil money into renewables. Basically, you see a lot of the sort of companies in like the iShares renewable energy section. Sort of in the better times, maybe earlier this year or sort of last year, were at 20, 30, 50 times earnings. Some of them, and yeah, Shell, you're sort of looking at still 7 times earnings. So if they can sort of build up this renewable section, you could be getting a sort of under the radar, potentially high PE side of the business if people are willing to pay sort of reasonably high times earnings, even if it is a subsection of Shell. I'm sort of kind of betting that they will be over time. Shell sort of greenify themselves a little bit and are sort of seen as, you know, half dirty, half clean, if you like. And maybe the whole business won't be at sort of 7 times earnings. So, yeah, I just thought that was worth sort of considering. They sort of show they're, up from earlier this year to sort of 5.2 gigawatts in sort of operation and under construction, and they sort of show a long-term potential of sort of 46 gigawatts in very early stage and sort of medium sort of maturity stage. So that's going to be very long term. I think that's probably just them sort of greenwashing, as they call it. Everyone's sort of saying in 10 years, 15 years, we're going to be doing X, Y, and Z. So, yeah, take that with a pinch of salt. But, yeah, the other sort of side of their renewables, I think, is sort of very interesting. You've obviously got wind turbine farms and solar panel arrays. But sort of an interesting part, I think, is the low carbon fuels. So people might not see this as quite so renewable because it is still burning fuels which do produce CO2. But the fuels sort of come from sources that would have produced more emissions, as I understand it. So take something like landfills, sort of produce a lot of methane. You take sort of agricultural side, basically cow manure, which is not obviously the nicest thing to be thinking about, but yeah, it produces a lot of emissions, and they can sort of take that gas and produce renewable natural gas. So where you have, maybe 1,000 tons of emissions, they're then removing that and producing sort of a gas that then when you burn it may only produce, 800 tons of emissions instead of 1,000. So you could sort of see this as potentially carbon negative, as opposed to sort of obviously building a solar panel array takes carbon, and even if your carbon emissions once it's built are zero, it's not negative. This is actually removing carbon that would have been emitted, and sort of, yeah, so carbon negative. Interesting sort of term. Yeah, people won't see that as sort of particularly green because it is still burning fuels that sort of produce CO2 emissions and that sort of thing. But yeah, if it's removing more than it's producing, then that can only be good. And this produces sort of motor fuel and aviation fuel, which at the moment there doesn't seem to be a huge amount of alternative. The sort of talks of hydrogen and that sort of thing, but and batteries, but for Arctic lorries and planes, it's not really on the horizon just yet. So yeah, sustainable sort of renewable fuel, sort of potentially carbon negative fuel, is promising, I think. And just from a sort of financial point of view, obviously things are sort of still going pretty well. Revenue up, sort of you can see like September last year, they're at sort of $60 billion, and then obviously into the wartime, as I guess we'd call it now, 85 billion, 85, 100, 95. So yeah, things are sort of rocketing up, and yeah, sort of net profit of say $43 billion in the last year. This may come down next year, of course, with slightly lower gas and oil prices, but yeah, not a great deal of debt on the balance sheet because they are sort of reducing a fair bit. So yeah, 95 billion in September last year, down to sort of 82 billion. So they're using part of the money to reduce debt, which is good, as we're obviously moving into a much higher rate environment. But you can see sort of cash on the balance sheet as well. Still slightly down this quarter, but yeah, 36 billion. So not too bad. And the sort of share buybacks, people don't really think of people think of big tech as sort of the big share buyback companies, but yeah, they've reduced about 7% of their shares in the last year. So yeah, probably a lot bigger than sort of the big techs, your Microsofts and your Apples sort of reduce, a couple of percent, I believe, per year. So yeah, Shell buying back 7% in a year, sort of not really a dividend, but effectively is more dividend on top of the sort of 3-4% dividend. So quite a decent return, I think. And part of the reason that I'm not really wanting to sell. So, as I say, sort of $40 billion ish of net profit compared to sort of 244 billion enterprise value. Best to sort of include the debt for companies with a lot of debt. Yeah, even if they're looking at sort of 40 billion next year, then you're at 6 times earnings, which has to be seen as pretty good. And then another one that has released earnings is my sort of favourite little darling of a stock, penny stock, Sylvania Platinum. Still £246 million. People not liking it all that much. They have had their dividend, so yeah, it was sort of running up to £1, and then had the sort of fairly large dividend. So yeah, for that, mine will be, I believe, about £950 to come in a month. So yeah, it's not all just about the share price, but it is one I'm still in the green on, plus these large dividends. So yeah, the sort of metals prices haven't been doing all that well. Sort of this is the last 6 months. Platinum sort of up slightly, not doing too bad. Palladium down, although this is sort of 25%, I believe, 20 to 25% of their output. So yeah, it's not all that bad for it to be down. And then the big money maker, rhodium, only about sort of 12%, I think, of their output. But yeah, obviously at this sort of price, $13,500 an ounce is it's the money maker, and it's been sort of relatively flat for the last quarter. But platinum being sort of 65 odd percent, that going up slightly has had a good effect. So their quarterly results looking good. Recovery of sort of production of metals is up. They mentioned sort of the last couple of quarters that they were having some operational issues, and that was sort of reducing production a little. And this has sort of come back slightly, so 2% up on last quarter's production. And yeah, the gross basket price is up 2% as well, sort of largely helped by platinum, it seems, and sort of offset a bit by falling palladium and rhodium, but not too bad. And sort of revenue on with sort of both the price and the production going up. Revenue up 7%, which is pretty good. And some sort of adjustments that they made last quarter gives you a sort of net revenue of 23%. Not really sort of too much to be taken into consideration on that. I don't really look at the adjustments too much. Tend to sort of look at top line to be consistent. So yeah, revenue up, looking good. Capital expenditure down. Need to sort of look into why this was quite so down. 40% down for the quarter. But yeah, this larger revenue does give you a very healthy net profit, up 35%. So $18 million for the year, for the quarter. And yeah, this has pushed the cash balance up as well, $138 million. So we've come back to the market cap. They've got sort of famously, as I've highlighted lots and lots of times, basically no debt. Some people may sort of look at this and spot the 80, well, just under 84 down here, and sort of assume that that is a comma, and that's $83 million in total debt. That's not, that's a decimal point. So it's $84,000 in debt, which obviously is nothing at all. And yeah, so $87,000 in debt versus what is now $138 million in cash is rather nice. And sort of against total liabilities of $28 million. So you wouldn't normally for a sort of net debt, you would net off the long-term and short-term debt and off the cash. But you could even sort of net off total liabilities. So everything they owe to anyone, accounts payable and all sorts, off the cash, and it still gives you $110 million in net cash. So, or properly excess cash, if you like. So just a quick calculation, if we're being very, very conservative and we take total liabilities off the cash, looking at sort of 110 million, divide by about 1.14 pounds to the dollar, so 96 million in net cash. So take that off the 246 million market cap, and yeah, looking at sort of enterprise value of about 150 million pounds. And just looking at the sort of portfolio overall for the week, so yeah, quite a few greens really. Stellantis doing quite well. Sort of energy stocks doing quite well. Chinese tech has recovered a little. Wasn't able to sort of buy the dip on any of those stocks. But yeah, so Process has sort of risen up quite a bit, 7.5% just on Friday. I still have got the cash and haven't actually made any transactions, so haven't sold my Lennar that I was sort of thinking of selling off, and yeah, still £9,500 of cash. I'm sure some of you are probably screaming at the screen as to why I haven't sort of been buying the dip on some of these stocks, or sort of trading some of my sort of better performing stocks for the beaten down techs, Meta platforms and Google maybe. But yeah, I just didn't really think it was quite the right time yet. I'll sort of hold off, especially with the Friday sort of rise up on the. I was kind of expecting a drop from the non-farm payroll sort of being strong, and yeah, I may have done it then, but no, it was a green week, or green day for some reason on Friday. Yeah, so Himax Technology's done pretty well. The house builders haven't really been moving that much. Sort of semiconductors pretty flat on the week. They sort of dropped on the Fed meeting and then rose on non-farm payrolls. Mining in general has done pretty well though. Sort of Vale and Rio Tinto rocketing up on the week, double digits, even though iron ore isn't particularly up. Again, sort of has dropped a little bit in the last couple of weeks and then risen back up. But yeah, the sort of miners have risen a lot more than the metal prices, so not quite sure what's going on there. Lennar is pretty much flat on the week, so yeah, I was sort of considering selling that, being quite a bit up, sort of basically just from the FX impact. Yeah, and then sort of the big tech has taken a drop. So Meta Platforms and Alphabet, despite being a little bit green on Friday, are sort of both down about nearly 10% for the week. So yeah, was sort of kind of hoping for one more drop on Friday and maybe buy, but didn't come to pass. So we'll see what comes in the next week. And then yeah, the not as much move sort of in the ISA. The REITs haven't done all that much. Argo Blockchain still obviously pretty much bankrupt from the looks of it, 94% down, and sort of the buyer that they had for their shares pulled out, and they're sort of looking for other funding. So we'll see if that comes through. If not, if they can't do sort of a dilution rights issue, maybe, I guess that would be an option, but it's still going to look pretty rough, I would have thought, for the shareholder. So yeah, that's a shame. That's sort of my biggest loss, £17,000 down, and sort of a load more in in the other account, so that's a shame, but knew the risks when I was getting into it. And then yeah, the smaller accounts is sort of largely Pan American silver, sort of not a huge mover, slightly down I believe. And then Argo down, Hive blockchain not doing too bad, and Atalaya mining has sort of been trickling up. Was sort of at the £2, getting towards the £2 range, and is now sort of 282. Copper did have a hell of a jump sort of in the last week, so yeah, possibly China lockdowns easing, and maybe thinking sort of increased demand on that. And yeah, as I say, Chinese tech has sort of been recovering a little. I wouldn't sort of take too much out of this. Would sort of still think it could be in for a bit more red, but we'll see. I might be probably, if anything, still buying the dip on Process rather than either of these two. But I am thinking about Baidu. It's sort of been hit quite a bit, and they do have a huge net cash position. So yeah, it's looking like sort of 6 or 7 times forward earnings, I think, which is pretty good. They've got their sort of self-driving car taxi platform sort of off and running in quite a few cities, sort of a fair bit ahead of the competition, it seems. So yeah, that's unprofitable, but could turn into something good going forward. So yeah, that's the portfolio for the week. Held up pretty well, a couple of thousand up, while Nasdaq and S&P are down quite a bit. So yeah, let us know how you guys are getting on and what you're buying, and like and subscribe. See you soon.